Josh repping POA. Where's Mercy today? Oh, hi Mercy, how's it
She's
going?
on. Yeah, can you?
I can't see all
Hey,
your faces.
I'm here. I'm right
Lovely,
here.
lovely, lovely, lovely. Okay, so I guess we're ready to start. Ladies
Did you talk
and...
to DC? What? Oh.
Oh, but you interrupted, dude. DC's on his way, right?
Hope so.
Okay.
I'm
Well,
messaging.
let's just have it so DC is busy working on his Catalyst project now. But ladies and gentlemen, welcome to the Decentralized Movement. This is the AfroFinLab podcast. We have our usual guests today, Sidney, James, Josh, and Mercy. And just straight out the bat, let's talk about the Cardano price in the past week, eh? I think it's dropped down to 10 cents last time I checked. And I had a bunch of people, some listeners to this podcast asking me, hey, if we had all these developments with Cardano, why is the price dropping right now, you know? Anyone want to fill in why you think the price is dropping?
Yeah, I'll jump in. Well, I think prices in general have dropped for not only cryptocurrency markets, but for traditional markets. So when things happen, sometimes people get a little fearful and then they move from assets into money, into fiat currency, into dollars or whatever their currency might be. So I don't think I think it had less to do with Cardano and the progress that they've been making on the projects, and more to do with just traditional finance and just kind of where we are with the markets kind of catching up with the reality that we're dealing with right now.
So this is all just part of it, right? Just hold strong and stake. In the meantime, is that what everyone agrees with?
Yeah, I
Absolutely.
heard Charles talking about like some exchange, South Korean exchange, some that got in trouble with the government, and then I think that's part of like what happened, and people can buy and sell and stuff like that. So sometimes we have these challenges with exchanges, the price of cryptos most times actually. So that could be part of the reason. I'm not saying that's like the only reason, but it's it's volatile. It's supposed to go up and down. That's how the market works. So.
Well, it's really hard to tell the difference between like what's pandemic and what's normal volatility. And I've been thinking about that a lot. I wish we could see the power of all this stuff on kind of the world as it was, and so it's always kind of going to be 2020 is going to be that year when Cardano launched and we had COVID to deal with. Can't separate.
I guess it's just a case of don't invest more than you can afford to lose. That's basically it. Cardano is a speculative investment. As excited as we are about it, you shouldn't invest anything more than you're ready to lose, and that's like a common motto when you come into this space.
And I am inclined to think that it's fairly new people who would be worried and who would be asking about the price, right? Because if you've been around since late 2017, 2018, you're sort of prepped for anything and everything. Now, I see the price. I don't pay too much attention to the price, right? Because I'm used to this. And when you are playing the long game, and especially these days that we are seeing all the projects that could possibly come out and be built on the protocol, you just realize that this is really insignificant in the long scheme of things.
Yeah, I believe that too. I mean, once you believe in a project like Cardano, or any project per se, at some point along you stop pricing, you just think of value, like, how this, what this project is solving and how this project will impact, the lives of people. A project like Cardano is really hard for you to, base your, your connection to the project on just price, even though that's everybody will be happy when the price goes up, but then you look at, the things that Cardano is solving, for me especially, I'm in Africa, and I know like the potential that Cardano holds, and we're able to adopt a project like Cardano, I know, be able to, leapfrog so many problems. So I can't focus on price. I have to focus on something that connects. I know I can get from Cardano, So I'm thinking of what to build. I'm thinking of when the things I can do once Cardano is fully, ready, have enabled smart contracts to, run on it. So I can't be looking at price, and it's really hard for me to look at price. Like Messi said in the beginning, it's just for new people basically, and it's understandable. We were all once there at some point.
Yeah. All right. So guys, I think it's important for us to highlight that this show is targeted towards new people. So let's not bash for new people. I think it's important that we spell out exactly why it is we still hold Cardano, even when the price fluctuates. Because, to someone new, it would kind of sound like a religion in a sense. If they don't fully understand the strong fundamentals behind cryptocurrency and, why the motto is just to hold until we have these projects online. So I don't know if anyone wants to expand upon that.
I'd like to jump in there. You're kind of investing in the future, right? I don't know if anyone here has a Tesla, but we know that Tesla is going to be a company that is going to be, very profitable in the future. And they haven't realized all their goals, especially with electric batteries. So when people are investing in Tesla, they're not just investing in Tesla because of the cars that they have on the road today. They're investing in Tesla because of the roadmap that Tesla has laid out in order to solve some of these problems, related to self-driving cars and then also batteries. So it's the same with Cardano. Cardano is a project that has been developed to essentially decentralize centralized institutions. So, pretty much, most all institutions are centralized, and Cardano and other projects have uncovered a way to democratize how we interact with kind of society around us. So instead of having these central companies, taking, in a sense, all of the profit. I'll give you for an example. So we all use Google, we use Facebook, Instagram, some of these sites that run ads. And basically, these sites are getting paid off of our data. And I get that we don't pay for the sites. So I don't have to pay to use Facebook. I don't have to pay to use Google. So they have to have a revenue model. At the same time, they're taking the information that we're giving to them and not only, using it as, eyeballs for people that are hitting their site, but they can sell that data to third parties, and we don't have control over that. So in a decentralized world, that changes. We get to keep control of our data, and we get to decide who gets to sell to us, and we get to benefit from that relationship. So, and that's there's a lot more to it than that, but it's kind of just in a general sense, we're investing in this future that we've all been asking for, which is just to have a little bit more power, so that we can have a little bit more control over how we move into the future and kind of design our destiny.
Right. Well, I think that's a good enough answer to satisfy our viewers, any of our new viewers. Just keeping up to date with the latest news as well. I think I read the Bank of England has released some clearer regulation in regards to stable coins in the UK, while simultaneously sneak this in Bitcoin. So my question to you guys, and just to clarify for our viewers, what do you feel that it's, you know, do you feel like government and cryptocurrency can work hand in hand together? I mean, does government go against the decentralized movement, or is there a way in which the both of them can kind of work together? I'm sure we're going to have some differing views amongst us. Dewayne, you're muted. We'll figure it out. If who wants to jump in, James?
I mean, it's a big question, and for me, it goes to like, to what I mean. So I think we're framing the question in terms of what impact our government's going to have on fledgling blockchains and cryptocurrencies. But what if we flip it and say, hey, like, also this technology has a chance to maybe meaningfully impact our government systems. The best governments, when they're working the best, are decentralized, and we know that we know that the ones that are broken are not, right? Power is concentrated. So by serving as a model of what happens when economic and political power is decentralized, hopefully we can see the rewards of that. And if that's all true, then really the question is about like, how much are we in danger of governments trying to stem the tide, right?
Dwayne, have we got you?
Hear me?
Yeah, we hear you.
Okay, nice. I'm telling you guys, Zoom is like, it's okay, but sometimes it's the worst. All right.
Yes.
Hey, to piggyback off your point, you know, James, I think there's a play in here for the governments as well, right? And I'll kind of take an example that Sidney gave as well. You talk about Web3 and the apps that we're going to build on top of Cardano, right? And, you know, what's the reason for holding ADA, right? Well, ADA is going to power all of these layer 2 applications, right? All these financial services and applications like Liquid Naira, they all run on top of Cardano and ADA, right? For the government, what's the play here? Well, for them, you streamline their costs of doing KYC and AML, right? And the cost of them doing credit tracking and history for all of their basically every single citizen in Nigeria right now, right? That BVN number that the banks have to spend overhead cost and entire regulatory and compliance units are right now being spent working on that. You know, you can streamline all of that, just giving them the on-chain access to see that data accumulate over time. And all of that works underneath the hood just because you're using a Web3, you know, unstoppable blockchain application, right? So you're already out of the box giving them a 10x in cost and time saving. So the banks actually don't hate you. They actually kind of like you because think about it. In essence, their customers are already using Ethereum. They're already using blockchains. There's so many of them out there, right? Like they're not stopping this. It's like trying to say they're going to stop the internet, right? But at least giving them the ability to do the functions that the government needs to be able to set their monetary policy, to be able to do regulatory and compliance, James, like you say, to keep them happy, right? Like these things that are basic functions of the government, right? You're allowing them to do that by talking to some of your applications that you build on top of Cardano pretty easily, right? And, you know, to Sidney's point about, you know, what do you do when you start giving people back their data? You know, when you start monetizing that data and building entire packages around credit and insurance and mortgage, right? All in the FICO equivalent to a credit score that you were able to accumulate as a borrower, right? Just because you were using Web3 DeFi instead of Web2, you know, bank loan apps, like the only players currently in the market. So that's the alternative. And that's kind of why you hold ADA, because you know the primitives that come out of the box with Cardano, the stack that you're building on, that's going to give you the access to build things that right now, you could even have the idea, you could have the team, but there simply isn't the tech that enables that. Ethereum doesn't do it. None of these other apps and, you know, smart contract chains do it, right? So that is kind of why we hold. It has nothing to do with, you know, religion or meme. It's not, this isn't like Bitcoin gang. Like, think about it. We just said basically last month, we just said everyone in the network is a staker. Everyone is the equivalent of a miner in Bitcoin's network. We earn, the protocol pays us. It's the equivalent of you getting paid by the protocol for you running a full node and giving security to the system, right? And the protocol says, this is the inflation rate, this is what it's worth right now. And directly you can tell the security of the network because it's just 51% of the market cap. Because and take over the protocol itself, there's simply no way that you'll be able to control Cardano. That's the whole point of us all being stakers. The more stake that's underneath the control of the consensus algorithm in Cardano. Sorry, yeah, I saw that. So all I'm saying is the more stake in the consensus algorithm for Ouroboros, the safer the network security actually is. And that's why you'll get less and less money the more and more people stake. We're bootstrapping network liquidity and security in one by paying a higher ROI at the start, right? And then slowly, gradually over time, decreasing that number. Kind of like the way Bitcoin has that halving every 4 that says every approximately 4 years, the supply that's going to be released as inflation to stakers securing the network is going to be cut in half, right? So basically, if we're in 2020 right now, we can think in this time in 4 years, the supply basically that will be handed out to stakers will be approximately half what it is right now. And you can imagine how that's going to, like in pure ROI terms, how that's going to basically affect the lower percentage that we're going to see just from base staking. Nothing to do with the products or financial services on top, right? This is just the base staking of the token that we're all doing right now, basically, since Shelly went live, right?
So in short, are you saying, just for our viewers, you're saying government can profit from this, basically, right?
Yeah. In short, yeah, go ahead, Tashoma.
Because I think there's some paranoia, for instance. Sidney, we were talking earlier, and you were saying, well, of course they're going to be against this because it means that you're taking power away from government. You're taking power away from centralized institutions by them kind of working with a decentralized protocol. Another thing I'd like to maybe clarify is how does this approach differ to what China is doing currently with their central bank digital currencies?
Yeah. Okay, so that's a great question, and someone should answer that on the stablecoin side, but I just want to pin how does the DeFi Web3 movement compare to the current Chinese incumbent Web2, which is like the OPAs of the world, like Joss can talk about, right? So I want to pin that discussion for later, but we can talk more about the stablecoin side of things, right? And I guess my 2 cents, and I don't know too much about what China's doing with their stablecoin backed like renminbi, but I do know that they've connected it to like Ethereum, I think EOS. So they're connecting it to basically a few other blockchain smart contract platforms and saying, hey, you can use digital renminbi to power these protocols and the decentralized applications on these protocols. Very similar to the way we're saying for, Liquid Naira protocol, you can take your, digital Naira and power these decentralized financial applications on Cardano. So it's akin to the similar, you can think of it as the same play, but we're going from the opposite. We're going from something that's centralized or the stablecoin equivalent of that centralized thing is trying to go from something that's centralized, into a decentralized network. So it's just like we're on the opposite side, right? We're building on Web3. China's got Web2 locked up, and so do all these other CeFi platforms, right? And that's how they're going to have to hook into Web3, right? The alternative is we're just going to provide so much more value, right, than the incumbent players. The OPAs of the world, right? They just received the Series B, $120 million funding from all these Chinese investors, right? Like, out of the box, Liquid Naira offers the same exact offering in a DeFi, decentralized, unstoppable, on-chain, non-custodial manner that cuts out the entire middleman process, maybe an order or two of magnitude cost savings out of the box from DeFi Liquid Naira compared to the OPay solution that currently is the best game in town for someone who wants to borrow or someone who wants to lend in Nigeria.
So, all right, just a bit of context, guys, because we've moved straight into the next topic, which is DC's catalyst project called Liquid Naira. We've been like talking about it and working on it behind the scenes for the past week. It's a genius of an idea. And it's effectively going to change the face of Nigeria, and inshallah, everything goes to plan. So, DC, could you just like give us a bit of background as to like how you came up with the idea in the first place?
Yeah, no, totally. You know, I think that there's a few things that allow me to form this, and I want to preface this all by saying, when we started AfroFin, podcast, when we started this lab, guys, like, I didn't have this concept in my mind. I knew the primitives existed for these things. I have a background in finance, so I understand how these concepts work in terms of interest rates and setting them, and makers and takers and borrowers and lenders. I understand how these markets work in America and the West, and the equivalent to them in, the emerging markets that we see in like Nigeria. My family is from Jamaica and the Caribbean. It is no different in these places, right? So what I'm saying is, this podcast in many ways allowed me to start thinking about things in a totally radically different, open democracy, right? Compared to the closed Web 2 system that we're forced to play in right now. What if we were, and I say radical in the meanings, what if we were, like Josh says, take the Uno reverse card and flip the entire script on the current banking economy in Nigeria, the current market of lending and borrowing? That's essentially what Liquid Naira, right? That's essentially what this protocol is really proposing as an option, right?
Yeah, just to make sure that concept doesn't go over people's heads, could you just expand more on what you mean by the Uno card?
Sure. So the Uno card concept is this, right? And I'll give you a perfect example we've already been talking about here today. This is saying that the OPAYs of the world, right? The current best fintech option you have in Nigeria for taking out the so-called 0% collateral payday-like lends as a borrower, right? And whatever the best solution is in Nigeria right now to go from money in my barter, digital NGN wallet to becoming a lender and actually gaining passive interest, right? Whatever the equivalent of that is, I am saying that out of the box, Liquid Naira offers a DeFi equivalent of that. That's an order or two of magnitude cost saving for the person on the borrowing side, in cost savings, in time savings, in friction. I say Liquid Naira, right? Like, Bruce Lee said, empty your mind, right? Like, be liquid, right? Like, be like water, be formless, right? Like, what's this concept of being shapeless, right? That's liquid, right? What is liquid about Naira? It's the fact that you're building a liquidity pool, the same way you build a staking pool that allows any borrower or lender in Nigeria to, in under a minute, right? In under 2 minutes, go from, I'm using my Venmo-like, barter app, to now I am using a decentralized application powered on Cardano, and I'm either earning interest passively for it, or I'm borrowing, and I'm in the process of borrowing, passively earning on-chain data and credit history that's going to effectively become the de facto on-chain FICO credit scores for the entire Nigerian peer-to-peer economy. Now think about that concept.
So DC, when you, as you talk about that, can you talk a little bit more, just a little bit more detail about what it means to have something on chain, and who's going to have access to that data on chain, or what that means exactly?
Absolutely. Sidney, that's a great question. And honestly, anyone, stop me anytime if I'm going too high, right? And it all, I wanted to start it with the Bruce Lee quote, right? Because like, be like liquid, like be like water, right? Like that concept, what does that mean, right? That means that anyone, right, can touch this protocol, right? It's shapeless, it's transparent, it's open source software, it's completely decentralized, it's unstoppable 24/7 on demand for both borrowers and lenders alike, right? And anyone who wants to build a DApp or who wants to build an application who talks to the data primitives that we provide on our open source tech stack, right? That's the concept. What Liquid Naira protocol is, right? It's not a bank and it's not a tech firm, right? It's the bundling of a liquidity pool and the open source software tech stack that's essentially going to serve as the de facto future for Nigeria's money market digital economy, right? That's what Liquid Naira protocol is, right? So all the fancy things that happen in the background that I know because I study finance, things like money robots that are algo optimized to set interest rates, based on the liquidity economics of the local pool, and also based on the on-chain credit history, right? That user has accumulated, right? And keep in mind, This is all linked to your Atala Prism wallet. Your Atala Prism wallet is your gateway into this. It's also the central banks, right? And the KYC AML units, it becomes their best friend because Atala Prism allows them to keep an eye on what their citizens are actually doing via that BVN number. That's the Social Security equivalent, right? So this concept is basically saying everyone can use our DeFi system, right? It is the best option, 10x to maybe even 100x to the current CeFi equivalent for borrowers and lenders in Nigeria. When we're able to bootstrap this and we have 20%, 50%, 70% of the Nigerian digital economy flowing on liquid Naira rails, which is really Cardano unstoppable decentralized rails, right? Then you can say to these governments, now you can actually understand the current economy of lending and borrowing. Now it's actually helping you set your monetary policy because you can get an accurate picture of what's actually happening. It's also saying to the Nigerian people, and here's why I say, that reverse Uno card and flipping the script. The current system says, hey, OPay and these current, fintech, I call them CeFi loan apps, right? These Web 2 apps are currently saying, we're going to give you a 0% collateral. We're going to make it a 22 to 25% origination loan fee. And we're going to do this payday business model scheme that front runs everything with these penalty payments and fees for the moment that these at-risk borrowers default on this loan, to basically tie them to us and chain them to us forever so that we can take their future cash flows and have rights to them and basically keep them in compounding debt. It's economically value destructive to an emerging market to do this to them. And I know this because I live in a country that would never allow, these things to basically happen and the only reason I say never allow is because the maturity in our markets, right? We can bend it, we can borrow and lend at near zero cost and friction in America. The only reason we can do that, right, is because we have liquidity in these money markets, right? These short-term loans, when I say money markets, right, under 365 days, right? So I give money to Josh pays me back at X date. The liquidity and maturity of those markets in America, when you think about how we built a whole entire financial system on top of them, capital markets, the trading of, short-term interest rates, the trading of the interest rate of the 10-year treasury bond and how that sets the benchmark for our entire capital market and concept of the risk-free rate, right? All these monetary policies and things that are happening very quietly and kind of succinctly in the background are what actually are powering this system. But all the user sees and all they actually need to know is this. You're trusting algorithmic trust, right, over the banks that set the interest rates today. You're taking the opportunity to go from 25% origination fee and all those other fees I just mentioned to go to our system as the DeFi equivalent that says we're going to, as a flat fee starting, offer 0.25%, so 0.25% will be the flat fee origination fee to start a loan on our platform. We'll offer basically zero in those, fixed fees and costs and rent-seeking transaction costs that the Web 2, OPays of the world currently offer, because it's all run on, the Cardano blockchain, on-chain, non-custodial, all handled by a smart contract. There's virtually zero overhead costs, right? So we're saying to the borrower, not only that, this system is going to allow you to build on-chain credit history and data so that as you borrow more and more, the algorithm itself is going to be able to price in the fact that you've been doing better and better in your FICO equivalent on-chain credit score and make it lower and lower for you to basically borrow and use the system. So if you had to go from 0.25% origination fee and maybe 50% collateral, you can quickly go from 0% origination fee, 0% collateral, and now you're borrowing for effectively free. And it's the same game that the CeFi competitor offers right now. But the reason we're able to offer you the 0% collateral, 0% origination fee, completely frictionless option is because you've decided to build on-chain credit in our system enough that you have the FICO equivalent of a 700 to an 850 credit score, right? This is a 0-to-1 innovation, guys, that currently doesn't exist.
So DC, I got a question for you. So is this possible in a, I'm sorry?
I said this is a 0-to-1 innovation that currently doesn't exist in Nigeria, right? Well, so to Josh's point, right? Josh, we had, maybe 3 or 4 sessions this week where we just sat down for 3 hours and talked about, you know, the current model of what happens right now, right? The OPAs, the Web2 legacy bank apps of the world, and what we're envisioning to run on Cardano rails, right? As this Web3 DeFi alternative, right? And as a result of that, I realized that, you know, the alternative doesn't even exist in the CeFi world when you think about it. Because the social security number equivalent in Nigeria, the BVN number, right? And to Josh, correct me if I'm wrong, but you currently don't have a credit score equivalent of that to where you can just go to a bank and say, hey, this is my BVN record. I've done so well. Look at me. I'm a you know, stable borrower. You can lend to me at a low cost interest, right? We call that cost of capital, right? You can decrease my cost of capital and let me invest in this thing, this profitable idea I have, because I can show you that I've done this good credit in the past. That thing doesn't exist in Nigeria right now. Is that what you're saying, right, Josh? Like, that's what we were kind of talking about. So to build the on-chain equivalent of that, to me, is a 0-to-1 innovation.
And so you couldn't do that. You can only do this on a blockchain, or can you do this using traditional tech?
So in the West, we have this today, right? We all have credit scores. We all have FICO scores. But we're saying, like I'm saying through my conversations and analysis with Josh, the BVN number, which serves as the social security number, right, equivalent, doesn't give Nigerian users the access to get their credit data so that they can use it, right, to the banks and to the insurance products, right? And say, hey, even the data products and exchanges, and say, hey, this is how well I've done in terms of my credit. You know, can you make my cost of capital cheaper, essentially, right? Or make
right. So right. So even the idea from the beginning of like how you're talking about. So I think it might be helpful because I know you have like a really strong finance background. And I think some of these phrases that you are talking about may not be, you know, people might not grasp them, you know, readily enough to really understand what it is that you're talking about, because it's really a brilliant idea. But even the idea of a liquidity pool, what exactly is a liquidity pool, and why is a liquidity pool important?
Sure. Yeah, that's a great question. I mean, and honestly, the best way I can think about this, but to put it in layman's term, is when you think about Cardano, right? When you think about the base layer of the network, right? We are all on what's called staking pools, right? And let's think about that concept for a second. So when delegated staking pools come out, I'm going to put, you know, some of my ADA, probably most of it, into Proof of Africa, and I'm going to be staking in Proof of Africa's staking pool, right? That means me and people from around the world, right, both in Africa, America, Asia, Europe, have all decided that we want to rally behind Josh and his mission. So we're going to promote his staking pool by giving his staking pool liquidity, right? Our ADA, the only thing that you can put in staking pools, right? Because it's the base currency of Cardano, is ADA. It's akin to the way the U.S. Treasury, you know, it's akin to the way you can only pay taxes in America, right? And that we can issue the Treasury as a way to say, hey, this is debt that the U.S. government is backing, right? This is backed by the full and good faith of the U.S. government and military, pretty much. So that's why we buy these Treasury bills, right? Because we know those Treasury bills are going to be worth whatever they are, whatever that interest rate is set. That's the risk-free rate, because America has people who are paying taxes every single year that can only be paid in that currency. The Cardano staking,
and I think
yeah, I'm sorry.
I think it's no. I just wanted to jump in there real quick, just as you're talking about it. I do think it's important, like as you're talking about it, to talk about it in terms of CeFi, of central finance, because those are going to be the concepts that people can relate to right now. Because anything that you say probably about Cardano and staking pools and some of the other things that are going on in blockchain, I think it's going to be kind of tough for them to be like, okay, you know, they're not going to get it. But if you can explain it in terms of, you know, current day finance and what we deal with and how people get loans and how people buy cars and houses and whatever.
Right. That's my, yeah, go ahead.
And just, oops, sorry. Yeah, just to jump in here as well. You know, and it's just back to Sidney's question, whether currently is there anything that's equivalent? And maybe, you know, between yourself, Dewayne and Josh, maybe Josh can talk to us about how OPay works, because in Africa and even in Ghana, there's a lot of use. So yesterday when I was reviewing the project, I was thinking, so why can't that be done in say Canada or the US or in the UK, but then it's so possibly done in Africa. And it's just because everybody has a phone, and there's a lot of financial transactions that go on phone. So maybe Josh, you could tell us a little bit about OPay and sort of how they give out loans and stuff like that, and the interest rate, which at times can reach 20%, right? And maybe Dewayne can add to that, I'm thinking.
And so if I hear you, Marcy, you're talking about like the mobile credits market in general, right?
Right. Because, like over here, in Western countries, there's nothing like that, right? We don't have that, that phone in your hands where you have your money right away. And, you can transact, you can receive and all that. But then in Africa, like when we talk of Kenya and, Eastern Africa with the M-Peso, and we talk about mobile money in Ghana and OPay and stuff in Nigeria, they already have more or less the infrastructure. It's something that they do, right? So it's very easy to transition that, remove the middleman and then put that on the Cardano protocol or into blockchain.
Could I just ask a question? I mean, what's the difference between these mobile money payments services, which they have in Africa, like M-Pesa, etc., and what we use here in the West, like Apple Pay, for instance? So what's the difference?
I think like the Apple Pay
that might be a good
functions.
question.
Okay. Well, let me start with OPay and the rest of them. So OPay is like one of the biggest because they got this Series B funding and $120 million, and it has allowed them the ability to spread and a lot of marketing. So they're like one of the big. We have other this like branch. We have Pay Later, Carbon, all these other services, but they do the same thing, right? They offer zero collateral. You can borrow. Actually, they let you borrow like a little smaller amount, and then works like credit score thingy. If you're able to pay back on time, then you can actually get past that limit. You can borrow more. But the problem is, I checked. I checked one of the I think OPay. Yeah, I was following up on OPay and see. Then I saw that someone is taking like which is like less than $300, and he's paying 23% fee, and it's just crazy, man. Like where it's unheard of, right? And I asked my friend. I said, "Hey, man, how much did you pay for? How much did they charge you like in fee?" He said, they made it look like it was not like 20. You're being can't pay 20%.
Hey, Josh. Hey, I think what you're saying is really important, but it's cutting out a little bit. Maybe you can jump off camera and see if that'll help a little bit.
Okay. Can you guys?
Yeah.
Okay. So pretty much what I'm saying is, since like the inception of phone apps, OP branch, we have Carbon and all these loan services like ripping off people from like loan fees. Finally, before these guys came, it's just you can go to bank, collateral, maybe a house or something, then they allow you to take fees. But this is like fees. It's just going. This one is faster, and people take money faster and easier. It's better because it's on your mobile phone. You don't have to provide any collateral. But then, at the end of the game, you have to pay more money. That it doesn't make sense why you should pay 20% or 23% on a loan. It just doesn't make sense. So where
those are fees. Those aren't even annualized interest rates.
Those are fees. Like
yeah.
No, let me get a question. What did he ask?
you said that 23% is a one-time fee right away. I mean, this is right up front. Yeah.
Correct. Not APY. Correct.
Right.
Yeah, exactly. So, and it's just, that's where, like when Ian doing DC started talking, and he's like, yo, he started opening my eyes to seeing like the equivalent of that on chain, and how we can completely flip the game, allow these people to build, not just credit scores or credit history, but also have the ability to own the, which has never been done before. You need to understand, like, this is for Nigeria, Africa as a whole.
Yo, Josh, this is hurting me, man. It's cutting out. It's cutting out too much.
Can I say one thing real quick?
A lot of people don't have the ability to actually create like a credit score, have the opportunities. Hello?
Yeah, DC, Josh, you're cutting out. It's low bandwidth connection. We're gonna have to get that mesh network up as soon as possible and sort you out. But DC, you had something to say. What was that, DC?
Yeah, Josh, we're going to just jet drop you basically. A jetpack, like one of these Johns that I use all the time. You need to just have a drone or a jet just come to your spot and just drop one on top, because we're gonna have a lot of conversations coming up about this, and I'm gonna need that internet connection. But no, it's okay because we use WhatsApp. That's been the key here. Zoom is terrible. I'm sorry, I'll say it. Zoom is not that great. But this is the game, right? And you guys kind of said it. The equivalent of it today is the payday lending schemes in America, right? Keep that in mind. Right. That's the equivalent of saying, oh, you have somewhat semblance of a cash flow in your personal life. Show us that utility bill. We'll give you a 0% collateral. We'll, have this terrible Web 2 legacy bank model that front loads every single thing you do wrong in our contract, with basically fees and penalties and rent-seeking cost transactions, because it's all on these legacy payment rails and infrastructure that's just expensive, and KYC on built-in cost, like all these things that we just automate on chain out of the box. Right now they're paying for, and they're not getting a good deal. It's terrible. And my girlfriend, her parents tell me they have friends in Nepal. It's the same exact deal there, right? It's not just in places like Nigeria and places in the Caribbean, like where my family is from, right? Like in Nepal as well. Who would imagine, right? And that's why you can see the model for M-Pesa. Like, look what they're doing in Kenya, right? They're expanding into places like Afghanistan. They're expanding into places all over the Middle East, right? And they're saying we can service these markets. We can service these places that are even, some of these places have diaspora, right? Some of these places have just many humanitarian things that cause just high velocity of movement, right? And you want to be able to attest to yourself on chain in a way that says, like Mercy said, everyone has a mobile phone now. If you have a mobile phone now, you also have a FICO credit score now. You also have a bank account. You also have the equivalent of a on-chain digital license, right? Or driver's license, passport, on-chain equivalent of that, right? You're either borrowing and building credit data to basically be able to one day say you get 0% collateral for 0% origination fee. Right now it's, close to 0% origination fee for, maybe 10, maybe 20, maybe 30, maybe 40 or 50% collateral, which is still such a great and better option. And the incentives to building good credit are so more baked into that system in this Web3 open democracy, right? Than the current OPay, legacy Web 2 bank app model that says we're going to give you the 0% collateral and then give you all these hidden fees that literally tie us to you with debt for the, until you can pay us back.
All right, so DC, we're coming towards the end of the podcast, but I just want to get this from you. Like, what's your big picture vision for the average Nigerian 5 years from now? Like, what is it they're going to be able to do 5 years from now, given Liquid Naira launches successfully, that they cannot do now, and how is that going to change their life?
That's an amazing question, Tashoma, and a great way to sum this all up, right? Thinking big picture, thinking macro, right? 5 years from now, the average Nigerian who either came to our app because they wanted to borrow and get access to low-cost financing, or they wanted to save, because they had money in their barter app and they came to our wallet, they will have built the on-chain credit history and data that they can attest to be able to go to a a DApp that's maybe built a layer on top of us, right? I call these things like bolt DApp concepts. Let's say you have a bolt DApp that is built for mortgage-backed assets and mortgage security products that say, hey, we're going to tie in the fact that you have this open source tech stack that is accumulating on-chain FICO-like credit history, and be able to say to everyday Nigerians in 2, 3, maybe 5 years from now, hey, because you've built up the equivalent of a 700 to an 850 credit score, we're going to offer you a mortgage to buy your first home for 0% collateral, 0% origination fee, 0% rent-seeking costs in there, all on-chain, all unstoppable, decentralized, anytime you want it, backed by a liquidity pool that's essentially the de facto decentralized Nigerian money market. That's what I'm saying 5 years from now is going to happen. It's inevitable. It's inevitable.
Wow.
It's liquid like water, baby. It's formless.
And then what I hear is that once this works in Nigeria, then it's use this recipe elsewhere. Right?
Oh God.
Take it wherever else it can be. Right?
Yo, if it works in Nigeria, it'll work anywhere on the planet.
Let's go.
Everywhere.
That's right.
Yeah.
Hey, Tashoma, I wanted to jump in before you close up real quick. You and I had talked briefly about like some type of term or phrase that we could talk about on each podcast, just to give people an idea of what like this world is all about. And DC mentioned DApp a whole bunch of times, and I'm not sure that everybody knows what a DApp is. So basically all a DApp is it's an application. It's the same kind of application that you have on your cell phone. It's Facebook or Instagram or Twitter, or any of those applications, or it's any of the applications that you have on your Windows OS or your Mac OS. But we call them DApps because they exist in the decentralized world, or they exist on the blockchain. So it's just an application, but it's a decentralized application, so we call them DApps. So whenever he's talking about building on top of Liquid Naira, he's talking about building an application, but it's a decentralized application, so it's a DApp. And there's a lot of different applications that you can build.
That's a great way to put it. And you can download these on the iOS App Store, just like anything else.
Guys, we got to wrap up. All right. So thank you so much for your contributions, guys. I think next week, James is going to share a bit more information about his work on Project Maybe. But yeah, thank you for tuning in. If you want more information, visit AfroFinLab.com. Remember
LiquidNaira.com.
Yeah, check out LiquidNaira.com as well.
At Liquid Naira on Twitter. Come on now. We got to shout that follow account. Come on now. Yes, sir.
All of that.
Put it in the show notes.
Yeah, that's it. And like, share, and subscribe. Tell all your friends, and buy some Cardano and steak with Zoe Pool.
Africa, the future shall be decentralized. Okay?
The future shall be decentralized.
The future shall be decentralized.
All right, let's cut it.
Right.
Cut.